All right, all you devils, how's it going out there? Sam here with you. It's the 1st of July, kind of middle of the day here. Now we'll get to the video in just a sec. Before we do, as many of you know, we just finished up on a survey of our current members and previous members, people that have come through, free members. And we asked a lot of questions. We were looking for feedback, what we're doing right, room for improvement, what we can do to help align with the areas that you all are interested in. So we've been through that data, and we again very much appreciate that, as we will use that information to adjust where things need improvement, or continue to focus on areas that members are getting value from. And then of course, with regards to new material and new content, we're using, of course, the video I'm about to run you through today is a direct result of that very feedback here. So we had a lot of people looking for information on option trading. So you will see more and more of that from us, as well as educational content for members. So we had good participation. I appreciate it. Any of you that participated, I very much appreciate that. And as a reward, as I'd mentioned, we were doing a random drawing here from any that took the time to fill out that survey. So we did this little drawing here. First prize being 0.05 of a Bitcoin, second being a month of educational, third being a month of social. So I'm going to hand it off to Grandmaster and Sensei Monte Crypto, who's going to do he used a randomizer here to do it here. So, but we'll do it live for you here. So I'm going to hand it off to Monte Crypto. Here you go. Take it away.
All right. Hello, everyone. This is Monte Crypto here with Trade Devils, and I'm going to do the giveaway for the survey. So what I'm going to do here is a little bit of backstory. So we're going to use random number generator. We've got 210 inputs here. 210. A little bit more backstory with it is we've got our OGs are going to have 2 entries because essentially they're already at the highest level, so they're unable to win number 2 and 3. So we gave them double entry to potentially win the 0.05 of Bitcoin. So let's go ahead and dig into it. So first one, 190. 190, we've got JCKY. Congratulations. 205. Who do we have here? Bish UK. Bish UK, you win 1 month educational. And finally, 54. Guido. Guido is unable to win this one, so we're going to go again. 121. Hanzo. I think Hanzo is also a, let's see. Hanzo. Just check and see if he's a free member. And he is. So Hanzo, congratulations. You're going to win 1 month's social. And that concludes it. So we've got JCKY wins the 0.05 of a Bitcoin. Bish UK wins 1 month educational, and Hanzo wins the 1 month social. Congratulations, guys, and thanks again for completing the survey. And with all your great inputs, hopefully we can continue to grow Trade Devils and make it a better place for you. All right, guys, take care.
Okay, guys, so let's take a look at Beyond Meat. Now, so what happens here, the reason I'm looking here is often I'll have members give me a list of equities that they're interested in, and of course I'll take a look for them and see if there's a trade or anything that might be of interest here. And I thought this was a good example for a couple of reasons. One, it's trading very technically, and two, I think a good example to show you some of the benefits of using options. This is how I would trade this. It's kind of just as we seem to be heading this direction, again, based off of the survey data that we got. So I think you'll start seeing more and more option trading and training as well. But I just kind of use this as an example. Now, if you're familiar with options, this will be, you'll understand exactly what I'm doing here. If you're not, this is, again, just some exposure, because we have so many members that are new to options. This is just some exposure to how you might approach this and some of the pros and cons of it. So this is Beyond Meat. I'm on an 8-hour here, so we can get some of the separation here. On the swing off the low here. So of course, when I first bring up a chart like this, I'm just, my eye is kind of going, okay, what's going on here? Well, so we've got a double bottom down here at our prior low. What looks technical? You do this long enough, and you get to where you can just kind of eyeball. So my eye just is kind of drawn to this little sequence here, right? So what does that look like? So what we can see here, as I often talk about. Oh, come here. All right, so we have from this little intermediate pivot, I have an internal retracement that upon breaking this low goes external, right? That's always what we're trying to do. Trade the internal to external. Well, just eyeballing that, well, of course, the first thing you want to do is say, well, I wonder if it's technical. So just grabbing this pivot. Oh, shit, I got the wrong one on here. So, oh, it's just a regular measured move. Okay, so let me try that again. Let me just grab the pivot, see how it traded here. So from that swing high to that swing pivot. So I tell you this all the time. I'm so sorry, guys. I tell you this all the time. The underlying asset makes absolutely no difference. It really doesn't matter, which is, sometimes I get a little frustrated when people are so reluctant to look beyond, well, certainly amongst our members, followers, subs, Twitter followers, a reluctance to look beyond crypto, right? So it doesn't matter, guys. They all trade exactly the same way. This algorithm is the dominant algorithm in the market. It doesn't matter what asset, what time frame. It simply doesn't matter. It's always the same. Well, until they trade it. Now, this has been going on for, I don't know, back when they were doing it by hand, right? Before it was an algorithm that was doing this, it was being done by hand. But here, now the precision here is just so remarkable. So swing, no, again, and I make a point of emphasizing this because I don't want you to make this mistake. We go beyond the 618. We go into the golden zone. That's where the pivot is. It literally splits the golden zone. Right, and then it's straight down to the algo target, right? So I know you think, well, okay, it seems to work in crypto. I've seen it's pretty good in FX, but not on an 8-hour chart of Beyond Beef or Beyond Meat that's going down. It's not going to be there, is it? Is it? Well, so you say, okay, all right, well, that's pretty fancy. Okay, so that was obviously something, there's an algorithm involved there, right? I don't think we need to wonder what happened there, right? We can see exactly what happened. So we get that low down there and you think to yourself, oh, okay, well, that's a pretty good rip off of that low. I can see an impulse there. Wonder why it stops there, right? I mean, it's going up. Why does it stop there? Well, what would be the first thing you'd do? Swing high to swing low. Where do we stop? Right at the golden zone. So again, I'm just kind of trying to emphasize to you guys, it really, what I'm trying to teach you guys, it'll work on any market, any time. We could be looking at a 30-second chart. It would not matter. We could be looking at a 3-day chart. It's the same thing over and over and over and over again, which is why after a while, my videos are so repetitive, but it's the repetition that I'm trying to get into your head, right? So because I want you to not miss this, right? It's really not that hard to do. It just takes some experience. But then the question becomes, okay, that's great, Sam. Very, very fancy. Okay, fancy chart work. Well, how do I make money with that? Well, okay, fair enough. Good question, right? So this has already happened, so great. Okay, thanks for showing me stuff that's already come and gone. Well, okay, slow down. All right, so let's look at it. So we know we have technical resistance here, and you could, right, you want to keep it, price action, guys. All right, there you go. All right, so prior resistance becomes resistance again, right? So if you want to think that that's coincidental that we hit the 618 to the tick, well, I would beg to differ, but that's all right. So let's talk about how we might trade this. So we know we have a technical pivot here. So let's take this one off just to clear it up. So we know there's the golden zone, right? So that's the resistance it has to get through. Well, if we just kind of, let's go down to a 3-hour here, and we kind of just dig into this, right? It's always a little, equities when you go into the hourlies, right? You'll have all the gaps to deal with. We can see a pretty clear count coming out of this, right? Nice little 1, 2. Here's our little 1, 2, 3, 4. Get just a perfect little ABC. Let's get this down a little bit. Vegas wave, right? Up we go, A, B, C again, right? So structure here, yeah, it overlaps, but it's not relevant to any invalidation in the count. You're hitting structure here, right? Prior resistance becomes the support. Down we come for the 4 in here, and then 1, 2, 3, 4. Looks like we got to finish. Yep, it does overlap, so you got to finish it with a diagonal. It's no big deal. All right, so there we go. So there's a 5. So we have a completed impulse. Now, having completed that with all the subdivision here to get us up here bumping directly into the golden zone, what are we anticipating next? Well, again, this is not complicated. It's not complicated, right? So let's, from the low, right? Come here. Let's get from our low, reasonable case to be made that I've got a 1 wave, right? I'd be looking for something down here for a 2 and 3, 4, and 5, still yet to come, right? You got to put them somewhere, so let's just park them up here. Oh, come here. Let's just put them up there until we need them for projection, because right now what we're trying to, let's change our color. Oh, maybe we'll do it in yellow so it stands out. Well, if we're anticipating that this move down here, which certainly looks like it's more impulsive, you can probably get, well, it looks like 1, 2, 3, 4. You can get a 5 into that. So it chops up a little bit when you go to a intraday, right, as I was just saying. Sure looks like an A wave, right? It certainly is a good contender. Well, we get the little pop here, and you right? So again, if you're just basic Elliott, we'd be looking for something like this to give us our 2 before we go up to the 3. So something in this range for the 2 seems pretty reasonable. Well, so you look here and you have, whoa, nice gap open. You go, huh, wonder why it stops there. Well, now, given what we've just gone through, what do you think is there? Right? Do I even need to draw this up? All right. It's the same, guys. It doesn't matter, right? So this is a golden zone. This was a golden zone. Went target to the tick. We've come down here. Now we retrace. What do? Right to the golden zone. Right? I mean that shouldn't be so. Well, clearly this is right. Algos are driving everything. Well, algos drive every market, every time frame. It doesn't matter, right? So this again. Now don't misunderstand what I'm saying. That doesn't mean that we couldn't do this and blow right through that. That's not what I'm saying. But you can understand why we pivot here, why we pivot here, why we pivot here, why do we pivot here. You want to understand where you are, because then, so we know algorithms are dominant. That's what's moving this market here. Well, let me rephrase that. Fundamentals are what move the market. What I'm trying to show you is when it moves, how does it move? And how are there areas where we can take advantage of that and construct a trade? Because that's the idea here, right? And the reason it moves, right? You want to be really rudimentary, more buyers than sellers, right? Demand outweighing supply. However you want to phrase it, why it moves. But it's same with Elliott Wave. Elliott Wave is not necessarily about where it's going, but as it's traveling, what are the patterns that tend to repeat as it's moving? That's really all we're trying to do. Okay, so knowing that, okay, well, sure, I've got a technical pivot. I've got a candidate, nothing more than that. I've got a candidate for a B wave because it's so technical, right? So we know this is very responsive to the golden zone. So if we're coming down here, god damn, never the first click. If we're coming down here, well, there the first algo target would put you right here in line with the prior resistance, right? We tapped it once before. So is that going to do it? Well, that's not an unreasonable thought. It would be a little shallow. Let's see if I get from the low here. See how we line up. We'd be a little shallow here. So you'd prefer it to see it come down, between, which just as we normally do. Maybe we bring this over a little bit because we can do a little time analysis as well. Bring this over here, something like that. This is where we'd like to see it. So the idea is to put together a trade that would take advantage of the movement down here, but then the potential rip up. That's what you're trying to do. So if you want to trade this today, which is this member was saying, hey, I'm interested in these 5 or 6 equities. I took a look at them, and by far this was the most technical and had the best looking trade. So if you're anticipating that it's going to go down and then go up, well, how do you deal with that, right, in the options market? Well, so so sorry. God darn these allergies. Okay, so if we're coming down here, Well, if certainly it's not unreasonable to see how technical it's been to say, hey, there's no reason why we couldn't pivot here, right? It doesn't have to go to the 50 or the golden zone. So, but I'd want to prepare a trade. So if we go past first target to second target here, I'm smack dab in the middle between the 50 and the golden zone. So ideal location. Additionally, we'd want to look for some swing relationship between the first pivot and this pivot. Well, here's the 100 right here at the 50. So this really is what I'm after, right? Can I get a trade that's put together here? So this level here, the 50 is at 108. 108, I'm so sorry, excuse me, 108. Golden zone down here at 94. So if we're going to come down here, I want a trade that's going to allow for me to make money as it comes down here, but I don't want to get stuck down here. Now, of course, it could keep going. So if it keeps going down here, well, the trade starts to break down, and the idea behind the trade breaks down. So you get out of the trade. Take your loser before it gets away from you. But this is what you're after. Now, if it goes here, not likely to be the 3 relative to this impulse, right? If it just goes here, if it were to do that, well, would more likely just be the 1, 2 before we go into the big 3, right? So because if we're going for a full 3, we know that that's more likely to be up here, right? So if we come down here, this is going to be that's our shorthand, right? As I've said many, many times. The negative 100 is our shorthand for a wave 3, 1618 right here. Now, if it were to pivot at the 50, it's not going to be on the tick, but it's going to be in this general neighborhood. God damn it. It's going to be in that neighborhood. Boy, I can never get that thing on the first click. All right, so somewhere in that range. All right, so if we, here I know the lines get crazy here. So let's say we pivot at the 50. All right, so the 618, so let's do it this way. Here's your 1618, 175 window for the potential 3, but we don't have the pivot here. So this is really just a guesstimate. But the reason that I prefer to trade this with options is because I can construct a trade that allows for all of these variables. So what do I do? Right. So again, this is just, most option traders would approach this if you have a directional bias. So I want something that takes advantage of it going down, but ultimately I'm looking for it to go higher. So what do? I wick off these levels, and I just construct a trade. And I say, okay, well, if we're between this pivot being a golden zone here, if I'm between 150 and, let's call it 107, if we're going to head down here, can I put together a hedged position that allows me to take advantage of this, but should I get the pivot here and then start to move higher, I want to take advantage of that as well. So I just go to an option model and plug in those variables, and an option model will spit out maybe 15 to 50 different trades. We look through those and say, okay, based on that, okay, and the time frame and what I'm looking at, okay, this is the trade that makes the most sense to me. So that's exactly what I've done. So I'm going to go over here to Thinkorswim. I actually I do the modeling in another piece of software, but I'm going to show it to you here on Thinkorswim because it's a free for everybody can use it here. But it's not particularly good for what I just described to you. I use a different option model, which when we start doing our training, of course, I'll share all of that with members. But so here's the trade I put together. So it's approximately $1,000 of margin. So you'd want to allocate $1,000 to this trade. I'm doing a 3x3, and we're doing a calendar spread, right? So I'm selling the nearby November call, and I'm buying as a hedge the January of 21 call. So why do that? Because I want to take advantage, if the analysis is correct, let's get back over here, and we're going to come down off of the idea that we're going to get 3 legs here, we're going to get an A, a B, and a C. If we're going to get the down movement here, well, I want to take advantage of that down, but I also want to be hedged because there is nothing to say that I couldn't do the exact same thing coming this way, right? So, of course, right, this is what always makes it hard. So if we're coming down, nothing says that we couldn't just come down here to this golden zone because we know it responds at the golden zone, and we go up here. Now I've got my B wave, and now I'm going down. Or I could go up here and double top. Now, if I get maybe the B... Come here, B. Maybe the B's up here. Maybe I get expanded. All right, so all sorts of scenarios here. So I want to put together a trade that allows for these variables. If it's going to come down here and go up, and we're going to double top, or I'm going to get the 786 here, I don't want to get to get crushed off of that, right? So I want to trade that is going to give me a very wide range of profit potential. But because I have an analysis here that implies to my eye that we're going down, right, to give us an ABC, to give us our 2 before we go up, I want the trade that takes advantage of that. So by selling the nearer the near November relative to the January, this is going to decay faster, right? So we've talked about options are wasting assets. So every day there's a time burn. So I want to take advantage of that by selling the near term, buying the long term. The long term, I'm so sorry, the long term just becomes the hedge in case I'm wildly wrong. So if I put this trade on and the analysis is correct, right? So we come back here and we start going down. Well, nothing says that I have to keep the trade on as it is. So if it's coming down and I get the move here from this golden zone and we come down towards the 50 at 110, and we're up here now at, 140 and change, and I'm getting that $30 move, well, that's a pretty good move down. So what do I know for sure? If that's happening, the November option, as it's moving away from the 150, the November call is losing value. Number one, it has no intrinsic value, so all it has is implied volatility value, and it has time value. So as it's going down, it's moving further from the price, but that time decay is burning off day after day after day. So that I want to take advantage of that. So if the analysis plays out and it comes down, there's nothing that says that I can't take my profit on the November and then stay long in the January. Right? See, I'm literally trying to take it down, then take it up. But again, for the possibility that I'm terribly wrong, I don't want to get buried on this. So thus I come back here and go, okay, well, I can put together a very wide profit range here for a trade like this in the options market. So I get going out to, well, let's use the early November here, right? So because we'd be selling the November. So that's the gray line right here. The yellow line, that's expiration. That's, don't let that distort your eye. That would assume that you got it absolutely perfectly, and don't assume you're going to get it perfectly. But over the next, well, really over the, July and August, going into September, November, I've got this nice wide range here. So on the low end, it's 114, where even if I'm at 114 and I get any sort of push back, then I'm going back into my profit zone all the way up to 211. See, it skews, actually, it skews long. So the way to get the maximum return out of this trade, granted, you're taking some additional risk this way, but this is, we are in the business of risk and risk management. If it comes down, I want to take profit on the November. And again, depending on how quickly it does that, could do this in 2 weeks. I mean, we could, just looking at the time frame here, we could do this or something like that. We could do that in middle of July, end of July. Again, assuming that analysis is correct, if we're going to come down into this range, we could do that before the end of the month. So back here, I want to look to take profit on that, but look at the amount of time. I'd have 6 months left on the January 150. So if we come down and then bounce back up, well, I don't want to give back the profit here. I mean, I could. That's a choice you make. So it would be a function of how much do you like the reaction that comes down here? Do I get a clean 5? Do I get divergence? Do I get all the things that I'd be looking for to say potential pivot? Right now, if you're just trading it outright, you got to pick the pivot, right? Or what I would suggest is you do it this way. You get the move, wait for the retrace, and then try to get in there. But I don't have to do all of that with an option trade. I can just, because that time burn is working for me on the front months, right? The trade, because because it's costing me money to get into the trade, I've got to manage that. So I'm going to take advantage of the time burn in the near term, but I got to be careful about letting the January get away from me. So if it starts to come down, if we start coming down and we're breaking this golden zone, well, then the trade is falling apart. So at that point, it just becomes a question of, well, I would have made money on the November. I'd be mindful of where my break even would be on the January, even though I've got lots of time. So if I were to come down here, I mean, let's see, this would be September. So I could go down here nice, and it could be very slow, could be slow to get down here, but I still have all that potential, right? So the point of the combination of the two is to hedge on both sides. right? But you do not have to stay with the trade. Or for example, what you could do is if this comes down, if you take profit on, you could take profit on 2 of them. So you could go down to 1, right? So now you leave the trade on. So now if it's going back up, look at, we're getting into, if you end up being right and it goes back up and you get up to 200, well, you're making, you got a home run on your hands, right? And you can't do that. Well, pardon me. You could do this, right? So you could trade it. You could sell it short and then buy it here. So you could recreate the same thing, but boy, you better be absolutely right on the timing. And so what options allow for you, it allows you to be right overall, but wrong on the timing, or wrong overall, but right on the timing. So you get this other variable because you have time working. You can effectively use time to your benefit. Right, because as we know, 90% of all the options that are purchased expire worthless. Because most option traders, and again, I've done this for a long time. Most option traders, when they buy an option, this is all they see. Like, wow, look at all the, man, I could make 15 grand if this goes up over 200. I could make 10 grand if it goes here, even though I'm still losing on 1. Right, if you went to a 1-3, right? So you could construct the trade this way, but you got some big downside here. If it starts heading lower, well, you're down $1,500 right here. So careful of that, right? It's always a double-edged sword. So you can use the options market though to help you fine tune. Okay, what happens here? Do I come down nicely? If I don't, does it look like it's accelerating lower? Okay, well maybe I got to rethink this. Right? There is no guaranteed winner, but there is this ability to manage based on how it's moving as it comes down. Do I want to take profit on the near term? Well, if I do, that means I'm very confident in the next move up, right? So I've got a 1, right? What am I trying to trade here? Swing and an internal retracement that goes external. Same thing as this. Exact same thing. Always the same idea. How can I get positioned to ride along with the algorithms that are going right there? Right? And if they do that, then it's just another algorithm that's buying that 50 or golden zone going up for the 30. It's the same thing over and over and over again. Every asset, every day, every time frame, it never matters. I think I've been doing this. I've been posting videos 2.5 years. I bet I've shown this 5,000 times. Out of 1,000, at least, right? There's 3 just in this video. If you figure there's 3 to 5 in every video, over 1,000 videos, I bet I've shown it 5,000 times. Still, people are like, oh, I'm not so sure. I don't know. Maybe it'll work this time. All right, guys, there you go. All right, so that's not a bad way to do it. Selling the November 150 call and buying. Well, we'd go back to 3x3. We'd start with the 3x3, right? So we're selling 3 of the November the November 150 call, and then buying 3 of the January 21 150 calls. Gives you this risk profile. If it comes down, you want to get really aggressive, right? You take profit on those. You leave the 3. If we go up, go get a rally. Oh, you got a monster on your hands, right? Right, so you made money on, but that's the sweetest part of an option trade. If you make money on the way down, take your profit here, and then you get the swing back. So you look at it and you go, shit, man, is that realistic? Could we be up to 200? We're going to make 12 grand on those remaining 3 options. Well, could we? Could we be up there? Well, there's 190. There's 200 right there. So that do you see the huge potential? And that's assuming I don't get my third, right? Where's my third? Where's my thirds up here at 288? If I get that 288 before the end of the year, and here's the end of the year, here's January of 21. So if I get this between now and the end of the year, well, here's 200s right here. You'd be pulling about September between 8 and 9 grand, all right, if you left the 3 on, right? You go to 220. We go up to 230, 240, where that wave 3 is. You're making $20,000 on that trade. This is the benefit of trading options. All right, guys, there you go. Lots to think about. There's lots more of this content coming. Lots of more training is coming. Oh, it's coming. Okay, guys, talk to you later.